All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great day, whatever day it is for you, and whenever you're listening to this. As always, it is Friday here on the podcast, and I'm telling you, this is a perfect Friday in Seattle, Washington. Well, Tacoma, Washington. It's just so beautifully sunny out there, and I am stoked for, I think I've said this on the last like 5 episodes, but I'm stoked for spring. I'm so glad it's here. So yeah, we're bringing the energy to you guys, and it's a good day for a second reason because we have Irwin Boris with us on the podcast from Payar Capital. Irwin focuses on flex and industrial, small bay flex and industrial. So this should be a good episode. It's always an asset class that I've been interested in, and it's great to hear more from investors that are out there in the field. So Irwin, thanks for hopping on the podcast.
No, my pleasure. Thank you for having me, Gabe. Happy to share my million years of knowledge with anyone who wants to learn more about, a really boring conservative investment class that just continues to compound revenue.
Well, as you said before the podcast, boring is better in real estate. That's for sure.
No, especially the last couple of years, with interest rates moving up and insurance costs tripling and construction delays and prices rising, it really, sort of led for the perfect storm for a lot of, ships to take on water.
Yeah, exactly. So let's start it out. We always like to start by hearing stories and kind of how people got to where they are. You've been in the game for a long time. I'm sure you got tons of good stories. So why don't you just take us back to the beginning and tell us, how you got here?
Sure. My pleasure. I got out of school. I went to work for an accounting firm. I took the CPA exam. We had a lot of real estate related clients. And this was back when accounting was done on monstrous pieces of manual paper. There were no computers involved. And,
nice.
I sort of got tired of putting numbers in boxes. And so I went to work for one of the firm's clients who was and still is a very large owner-operator of apartments in the New York area and now in other states. And they taught me the management side of the business. And so I got a good appreciation for actually what went into those numbers that I was looking at as an accountant. And so, a lot of times you look at, financial statements and you're like, oh, the numbers look reasonable. How do you know they look reasonable? Until you really, I guess, touch the operations and you know what goes into it and how to make those numbers and why they fluctuate from year to year, you sort of get a better understanding. And, and through my career, I've spent, 15 plus years on off as a lender, I think 18 years as a lender, and the other half working for owners, either doing, asset management, financial structuring and acquisitions. And so I've really touched all the food groups from multifamily to office to retail, hotel, and to industrial. And, as a personal investor, a lot of people start in either single family or multifamily. And early on, I noticed that a lot of the multifamily deals, so some of them really worked out much better than expected. Some of them not so much, and some of them didn't work out because, you can't see things no matter how much due diligence you do. You can't see what the underground water lines and waste lines look like.
You can't see into the walls, and you never know what's back there.
Yeah. Some people have gone so far as you put a camera down a waste line to see if the waste, but the supply lines are very narrow. You're not looking at that stuff. And I had one investment I was in where we had to dig up a lot of it and replace supply lines. That was unexpected. So as I went through my real estate journey and having worked with others that were in this industrial and shallow bay class, I'm like, well, this is great. You don't have the tenants are paying most, if not all, of the operating expenses. B, they need to be there. C, the insurance doesn't swing on industrial like it does on multifamily because of all the natural disasters. And I don't have to really depend on big capital expenditures to renovate apartments to try to get another $200 or $300 a month. And so it became it's a really boring investment. And if someone said to me, why do you like it? I said, it's easy. The revenue compounds every year. Like if you took your body weight and compounded it 3% a year for the next 7 or 10 years, you'd say, "Oh, I got really fat." I'm like, exactly. So that's how I know the revenue is going up, and with that, the value is going up.
There you go.
And so over time, I've learned not to chase, pro forma IRR equity multiples. I'm chasing deals that I know are going to distribute at least 8% in the first year. And as rents compound, that's going to grow. And as that grows, I'm creating wealth.
Yep.
So
Yeah.
it's a simple formula that's worked. I'm not saying I'm the smartest guy, but I have a formula that's worked for myself and my investors and some of my partners, and we continue to deploy that as how we do business.
If you have something that works, don't change it, don't fix it. It is just stick with it. That is a good formula to be following.
Yeah,
I feel like
many years ago, I was taught that if you couldn't analyze a real estate deal on a cocktail napkin, a 3x5 card, maybe you shouldn't invest in it.
yeah, I like that. If you don't need Excel and you can just sit down with a piece of paper and jot it out yourself, makes it a solid investment. I feel
Very
like it is
true.
unique though, because multifamily is, it's one of the hotter, if not the hottest asset classes out there for investors. Everybody loves to look at it. There's a lot of talk about multifamily. Obviously, there's a lot of demand for housing, so there's good reason for it. But I mean, you've kind of shunned that in favor of industrial, which I feel like is pretty unique. Um, have you owned multifamily in the past, or is industrial? I mean, is that just what you're focused on 100%?
I've invested in a lot of multifamily. Maybe got out of some of it too early,
Mm.
given how it continued to run. But what do they say? The bulls make money, the bears make money, and the pigs get slaughtered, type of thing on Wall Street. Sorry, so maybe I got out a couple years too early on some of the deals, but we got into these deals like in Raleigh and Charlotte when everyone used to say where. It was a flyover city. The institutional guys were like, where? Now it's a hot market. Uh, and I'm invested in one multifamily property down in Virginia, which we actually have on the market to sell. And I watched insurance go from $285 a unit to $1,100 a unit in a year and a half with all the natural storms and disasters. And all right, we have very low leverage on it, and it's still generating some distributable cash flow, but not what we thought. Then I'm like, you know what? I don't need to be subject to shortage of the A team staff and have to hire B people or vendors wanting more and more money to renovate an apartment. I think when we started, you could do a 1-bedroom apartment with countertops, cabinets, flooring, and everything for $10,000. Now it's up to over 20 for a good renovation, and you gotta like take a number and wait for them to get to you.
Oh,
So it's just so much easier not to be subject to the gyrating operating expenses, not to be at the mercy of vendors or suppliers, and to have something where tenants typically stay in the 3-year leases with renewal options, 5 years or 7, a mix of things, and I can manage my risk a lot better.
well, you've convinced me. So you do both industrial and small bay, and by industrial, I'm assuming you mean warehouse industrial, correct?
Yeah, yeah, larger space. I do very few single tenant, industrial deals for risk.
Mm.
That not everyone is going to sign a 30 or 40-year lease, and if they're signing a 30-year lease, you as an owner are missing a lot of rent pops.
Mm.
And I look at some of these big institutional, even the REITs that like these 30-year leases. Well, when rents really started to spike the last 8 years, they left a lot of money on the table because you missed a lot of rent increases.
Yeah, makes
But
sense.
that's what they do. So we have we'll do some single tenant deals where the tenant is tied to the building and the workforce, and that's part of the due diligence. I've invested in 2 single tenant deals. One of them, it was a basis play. The tenant has a 15-year lease renewal options, and they've been in there for 30 years but didn't want to own the building anymore. And if they go out of business, I could divide it into 3 pieces and make another $2 a square foot, but they pay like a clock. The other one we bought, I'm invested in, is in the middle of Indiana. They have 500 employees, and when you have 500 employees that work in 3 shifts, 7 days a week, you can't move more than a couple of miles because you lose part of your workforce.
Yeah.
And so it's easier for them to pay $2 a square foot over a 7 or 10-year period in rent increases than it is to move to the other side of a state or another state and try to recreate your workforce.
Yeah, that
Uh,
makes sense. I've never thought about that.
yeah. And when we look at smaller tenants, and we have it could be older industrial with lower ceiling heights, or even the really shallow bay where you have really small tenants. It's why is the tenant there? Are they tied to their suppliers? Are they tied to their customers? Are they tied to the workforce? Does senior management live in the area and they want something there? Like in Shallow Bay, tenants that are typically there have a need for a delivery dock for some reason. They can't be
Mm.
in a traditional office building. And so in some of the Shallow Bay parks, you find people with a large office percentage, and they're there for a reason.
Yeah.
Because they want to be. They want control of their own space. They have equipment that they can't get into through a loading dock. It's a security issue. So I might have, and you have some interesting tenants. Some people, they raise tropical fish. They start plants. They grow coral. You have
Grow
compounding
coral,
pharmacies.
interesting.
Yeah, compounding pharmacies. Nuclear pharmacies.
Wow.
Generic pharmacies that do distribution for pills for medical groups. Uh, some of the space might get used for like an indoor trampoline park in some of these places because it fits good. Uh, think of the plumber, the electrician, the carpenter. They all need a little bit of office space, park to put supplies in, and maybe a couple doors to drive the trucks in and load out and go up to their customers. So they're in everybody's backyard, but no one really ever thought about investing in
Yeah.
them.
One of my partners, that's his main thing is small bay, and he absolutely loves it. And yeah, I've heard only good things so far about small bay and industrial, multi-tenant industrial. How do you go about finding these deals? Is it all through brokers, or are you guys doing off-market stuff?
We we do some off market stuff. It's like if I happen to be driving around and I see sometimes it's for sale or for rent, I want to find out more about the property. Sometimes if it's a property we own, we always canvas people that are around our existing properties. A lot of it does come through brokers, either on an early look or third look after it gets dinged up and falls out of contract, and they want someone that'll close. Brokers do serve a need in the market. I'm not the guy you come to if you want the highest price, though. I'm the
Yeah.
guy you come to if you want to close. And I personally invested in a deal that it's a third transaction with the same seller,
Mm.
and the hold was up, and the private equity JV partner wasn't giving the sponsor any more runway, and they
Mm.
would have liked to get a couple more dollars, and they had a higher offer. I said, look, the sponsor here bought two other deals from them. You want someone that's going to close and not retrade you, and you have a formal contract, and you know who you're dealing with, or you want to take a high flyer and try to get an extra $2 million.
Yep. So that's interesting. So you do off market stuff. You do look for industrial that way. Is it percentage wise? Is it mostly through brokers, or how successful have you been just actually reaching out directly to to the actual owners?
Well, we reach out. I guess maybe 10% of the stuff comes direct from owners that we talk to. A
Mm.
lot of the off-market deals are really, I guess, early look from a broker. Say, hey, the seller doesn't want to do a full marketing. What do you think? Let's try
Yeah.
to make a deal. We do a lot of those, and then the other majority is deals that aren't getting traction anywhere, and the broker's like, look, just make me an offer.
Yeah.
Just let's see if we can get somewhere.
Yeah.
And so, we analyze a lot of deals, but I'm never going to chase a deal. I'm going to wait for the deal to chase me.
I'm getting to the same way. I'm tired of I've closed enough deals and I'm just like, I'm just gonna wait. I'm not gonna be so crazy about like chasing these guys and trying to get the deal done. If it comes, it comes. If it doesn't, hey, let's get off my
That's
back.
right. You got to make your money on the buy, so you got to be patient.
Yep. So two other things. I want to talk about location and I want to talk about return for these guys. So
Sure.
individually, I buy mobile home parks, self-storage facilities, and RV parks. But I look for heavy value add. I'm looking for a good cap rate, on the return essentially. So like for RV parks, 12 caps if once I do all the work and on that side. What do you typically look for in small bay and in multi-tenant in terms of like your on close cap rate?
Sure. We're seeing a lot of deals north of an 8 on
Oh,
in-place
okay.
revenue and
That's not
in-place
bad.
occupancy. Sometimes we're seeing 9s and 10s, depending what the situation is, why the seller is selling. You know, and then again, also a lot of it's based on the occupancy and what the remaining weighted average lease term is. You
Hmm.
know, typically, some people only want to buy if there's you know, 7 to 15 years left, on the leases. I don't mind buying if it's a multi-tenant property if there's 2 or 3 years left on the lease, and I understand the market. That's where the opportunity is. Industrial is really a game of nickels, dimes, and quarters of moving rents, and sometimes by having a shorter lease, I can get rid of tenants that I don't think are desirable and letting others expand.
Yeah.
Uh, and some business owners, especially on the smaller tenants, even within a high ceiling height industrial building, they can't see more than 3 to 5 years. And so
Hmm.
they might have a lease with 3+2 or 3 3-year options, or 5+5, because it's hard for anybody to see signing, a 20-year lease,
Yeah.
especially if you're a smaller business, because you don't need,
Unless
like,
they're
there's a
like
lot of stuff
Johnson and
that,
Johnson or
yeah,
something.
yeah.
Yeah.
And even then, if they want to terminate early, they have the money to pay a termination fee.
Yeah.
The smaller regional tenants don't want to be exposed to that, and that really creates a lot of opportunity.
Yeah. No, that makes a lot of sense. And you've mentioned location a few times. I feel like, for all real estate, location is very important, but for industrial specifically, I feel like you will definitely live and die by where you buy or where you build the type of the facility. Where I'm sure you don't just look in one state. Where generally do you look for property in terms of, around the United States, and then within those locations, do you like to look for certain areas in the city, or how do you define where you're trying to buy the properties?
We look for a lot of secondary locations adjacent to major metropolitan areas. And, if you think about the roadways around the United States, especially in the eastern to middle of the country, north to south, 65, 75, 85, 95, go north to south. You get 90, 80, 20, 91, whatever's going, 66 going east and west. Uh, uh, and typically these are in sort of major industrial areas anyway, where there's a
Mm,
lot of flex properties, and tenants need to be there. Sometimes you have a lot of rail access, sometimes you don't. Sometimes they're inland ports that people have built over time. Uh, but I'm not chasing like the middle of Atlanta. I'm
yeah.
chasing stuff that's outside the perimeter road, north and south, that has a reason to be there because the rents are 30 cents on the dollar, and people want to be there because it's better for their business. Um, I'm also not chasing A properties. I'm chasing Bs, older product, at a real discount to replacement cost. That tells me it's always going to be full.
Yeah, makes sense. How about square footage? Do you have a minimum square footage requirement, maybe per bay, per property?
I guess it's probably 100,000 square feet per property. Probably $10 million acquisition cost on the low end, up to maybe 30 on the upper end. I like to stay below, the regional targets and the REITs and the nationals. I don't want to compete with them because I also get better cap rates on the small transactions. There are, although there might be a lot of buyers, there are less buyers who know what they're doing.
Mm,
Like,
and that makes a
especially
difference.
on the $10 to $12 million range, you have a lot of guys that syndicators that used to do multifamily or whatever, and now trying to figure out another life for themselves.
Yeah. Poor guys. So for those guys, anybody listening to the podcast who they hear what you're saying, they're like, you know what, Irwin has it right. He's got the right asset class, and they want to get into small bay or multi-tenant industrial. How would you suggest they get started? What type of properties do you suggest they look at? That kind of stuff.
Yeah, they're probably in everybody's backyard. You drive by them. You look at these buildings that might have a bunch of roll top doors on the side, and sometimes there's trucks or cars there. Uh, they're in every town, even in my town in northern New Jersey, and so you look where contractors might have a business. Whether it's a plumber, an electrician, a painter. Typically, you find them there. There might be smaller buildings. You might be buying something that looks like a 3 tenant garage building. Uh, so it might be 20 or 30,000 feet if it's something that you want to start on your own. I would say that we've learned that bigger is better. I like the credit by diversity, buying a building that has 8 to 15 tenants in it on the low side, because someone's always going to be moving in, and there's going to be downtime and getting the next tenant to lease. So you always want to make sure you have enough cash flow to pay the mortgage,
Yeah.
uh, you know, and not have to call capital if you're something you're going to bring in friends and family on. But it's a great asset class that's been very good to us, even during COVID.
Yeah. Yeah. That's the one. It makes sense why you're not looking for single tenant, because that would scare me, having just one tenant renting such a large space from you. Because the mortgage is going to be pretty high, and the instant they leave for whatever reason, you never know. Things happen for every reason,
Right.
and so once that happens, and you're shit out of luck, you don't have a tenant paying, then things can get hairy pretty quickly. So it makes sense that you're looking for multi-tenant and then flex pay. Of the two, which do you prefer, multi-tenant or flex pay?
We've done both. Yeah, it's a question of cash flow. The shallow or flex is just harder to find below replacement cost, because no one's building it anymore.
Hmm.
But for us, it's about positive leverage, cap rate versus financing rate, and where we think we could take it. So we're agnostic as far as either one. It's a question of the one thing that it has to have is positive cash flow when we close.
Yeah. Yes, that is a good rule to have going into properties. How about value add? What are the types of value add that you look for? If you want to improve the property, or I'm
Sure.
sure a lot of it has to do with the lease itself. What are the different value adds that you guys do?
Yeah, sometimes we're still seeing deals at a modified gross or gross leases we can convert to net.
Hmm.
We're looking for properties on oversized pieces of land because you could use it for truck parking,
Hmm.
or maybe a building expansion if you need. In some states there are incentives for solar, so you might think about solar or battery storage or something on site there. Uh, and then it's a slow roasted investment. It's not like where you're trying to see trajectory of renovating as many units as fast as you can in multifamily.
Yeah.
So there's always a increased revenue strategy or expansion strategy. And sometimes we buy buildings on excess pieces of land just because we know we can expand it.
Hmm.
And that, sometimes depending on what's going on, that helps you sell at a better price.
Yeah.
It's a covered land, income generating covered land play. Uh, and we're happy to do that as well.
Cool. I love it. All right. And before we move to the quick question round, we always like to talk about the economy, because it's going up and down, and there's a lot of people saying different things about what will happen. So if you looked into Irwin's crystal ball, what would you say for the next 2 to 3 years will happen in the economy in general?
Well, it's kind of interesting. I was looking at a couple of newsletters and some of the quotes from some of the dinosaurs, the big boys in the industrial space. And you get guys like Clarion Partners, who's part of Franklin Templeton, who thinks the next 2 years are going to be great for buying, great buying opportunities in general. And they put that statement out before the current D-Day, fiasco that we're experiencing here with tariffs. And then I saw another article this morning. I think it came out in CoStar, where Blackstone thinks time to buy is when there's uncertainty. And I think for the next 4 years, we're going to experience a lot of uncertainty with the current administration.
Okay. So your
So,
prognosis is now is a good time to buy.
yeah, and then I saw something also in one of the trade publications with Prologis, who's a huge dinosaur in Class A industrial, that they're going to put a lot of development projects on hold right now,
Oh, okay.
even
Interesting.
with the what might be an increased demand with all this push for onshoring. The tariffs are creating uncertainty as far as construction costs, and if you don't know what your yield on cost is, why are you building if you don't know what your return is? Uh,
What's the price per square foot on build costs for industrial, for a
well,
small bay, I guess?
depending on kind of small bay, some people use metal panels, corrugated panels, insulated panels, and you might have spaces for the fire code type of stuff. I really like concrete or brick,
Hmm.
and that stuff is without the land. It could be 150 or $200 a square foot,
Okay.
plus land and things like that. So a lot of the buildings we've bought are less than $100 a square foot, and those are occupied buildings.
Wow, that's great.
which is pretty good. But tariffs have created, a lot of uncertainty. And when you look at the way the stock market is gyrated, so I'm hearing some of my investors is like, we don't know if we're going to invest anything anytime soon, or we're going to invest less because we want to have more cash on hand. We're seeing cost of living increase and operating expenses and our businesses. It's the same thing I'm experiencing. Uh, and then on from the financing side, it's like, if you're like, we've done a lot of CMBS loans over the years. If you have to deal with a lender now, the lenders don't know what's going on.
Mm, yeah.
So you can't trust anything, even if it's someone you've closed with before. I don't know how anyone is going to finance. All the deals are sort of getting stagnated, or normally you would have gotten 10 offers or 5 offers, and now you're lucky to get one, and it's ugly. Uh, so it's kind of an interesting time, unless you're fortunate to have something that's straight down the center of the fairway. Uh, it might be difficult to finance unless you're willing to provide recourse.
Yeah, makes sense. Yeah, the stock market has been. I don't do the stock market anymore. I did for a second, but I learned my lesson, and I said, you know what, I'm sticking to real estate. But I have some friends that play the stock market, and they've been having a ball with this up and down. So it's definitely an interesting time, that's for sure.
No, it is an interesting time. It's just that I've learned not to open any statements, and I keep telling people not to open their statements, and everything will get better, but it might not be until there's a change of administration, a change of thought.
Yeah, we'll see. All right, that leads us to the quick question round. You ready to rock?
Sure, go ahead.
Let's do it. It starts
Sure.
with education, could be any form, could be a conference you've been to, a
Right.
mentorship program you've been a part of, book you've read, movie you've seen, anything. But I need 2 recommendations, one for general life wisdom and then one for real estate.
Sure. I guess in general, it's you never give up. Now's the time. If you don't put 100% effort in and believe in yourself 100%, nobody else is ever going to. And one of the guys I know for a very long time that I follow on social media, basically self-made guys, is Gary Vaynerchuk, Gary V.
Oh, yeah.
And so, and
He's
Gary
fun to
V,
watch.
it's fun to watch. He doesn't sugarcoat anything. He tells you the way it is, and he's been very successful at it. And I think young people and older people can still learn a lot from him.
Yeah.
Uh, I would say, if you go into a meeting, never assume you're the smartest person in the world, because there's something to be learned along the way from everybody.
Yeah.
And it was hard when I was younger, but my grandfather once said to me, if you keep your mouth closed, people will give you the benefit of the doubt. If you open your mouth, there will be no doubt.
That's funny. That's a
So,
wise grandpa right there.
so over the years, I've learned to be more of a listener, and then my father added on to that previous thought. He says, sometimes even if you know the answer and you're 1,000% sure, it in your best interest to say to somebody, that's kind of interesting. Let me think about it and get back to you. I just want to check my facts, or just do a little research. It makes you sound like you're putting a lot more thought and effort into it. It makes you sound, a little more disciplined, that you're going to do some extra due diligence on their behalf, even if you know what all the facts and figures are at the top of your head. Sometimes, being a little patient, especially if you're trying to attract somebody to do business with, they get a little more impressed with how thoughtfulness that you're putting into your answer.
Yeah, I like that. One of my the favorite books that I've read, I don't even remember the title, but it was Benjamin Franklin. I can't remember the book that he wrote, but it was talking about how being tactful in your communication and using patience even when you know that you're right. I think that's really wise. Especially, it's really difficult when you're younger, especially to keep your mouth shut and just not talk so
Right.
much. But listening
Exactly.
is definitely the stronger strength or the stronger position to be taking there. So I like that. All right, next question is for your younger self. Let's go back to the Irwin who was still a CPA, going paper to pen, just going through the motions there. Go back to him, look him in the eye, give him one piece of advice moving forward.
Uh, that's kind of interesting to step back that far. I don't know. Maybe I would have stayed an accountant a couple of years more and try to learn a little more. Uh, maybe outside of real estate, while I'm still, from an accountant's point of view. But I find that I am appreciative of having that accounting degree over a business or a finance degree because when I was a banker, I remember having a borrower come to me, and I've only done like 3 single family loans involved with them for some of my borrowers, and I had to explain with the people who underwrite single family loans how to read a tax return. I have a
Hmm.
woman with an extremely high net worth bidding on a house at auction, $2.5 million house, and they call me up and say, "We can't lend her any money. She doesn't have any income." I'm like, "What are you talking about?" "Oh, we're looking at her tax return. She has no taxable income." I said, "Pull out the Schedule C's." I'm like, "You see those non-cash items? What's a non-cash item?" I said, "Depreciation and amortization." I said, "Those are non-cash items. Add those back because they're not expenses that you actually have to pay." "What
Hmm.
do you mean you don't pay them? It's not a real tax return. It's not accurate." I'm like, "No." I had to explain what depreciation was and how the government lets you do that. I said, "If you add both those numbers back, and they call me back, oh yeah, she's got a lot of money." I said she doesn't have to pay tax on it because of depreciation and amortization.
Yeah.
So it's helped me dissect financial statements and read footnotes because sometimes you have to read those on a tenant, what's going on,
Yeah.
and understand financial statements and how to present properly. Uh, and I think that if I had maybe spent another year or two as an accountant, I'd understand at an earlier stage how to put together financial statements.
Yeah.
Uh, so there's always something to learn. You know what they say is hindsight is always 2020. It's like every time in our life we'd say, "You know what? I wish I was 10 years younger. Here's what I would have done different." So it's something like that.
Yeah, that's right. Yeah, I've thought before that I wish I would have taken an accounting class in college. I got a philosophy degree because I was going to be a lawyer and completely useless now. But accounting would have been a nice class to take because now that you're looking at all these sheets, especially depreciation, I understand what it is now, but I didn't when I was coming out of college. So it's definitely a useful skill to have. All right,
Definitely.
going on to the next question. This is about the US. It's a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
I like as far as the metro, I like Indianapolis. And I like the state. I like Indiana. I like spoken wheel cities. So you got Indiana, you got Columbus, you got Cincinnati, you got Atlanta. Because you think of north, south, east, west traffic, as well as the circulating cars around them. So I really like those areas for investing. I think more of the investing, especially now that with this onshoring, that people want to say they're going to build factories here. I said if it's something you're going to speculate in, be careful because I think when people really think about some of these proposed tariffs and the amount of capital that is to build some of these facilities, and then the return you're going to want on these facilities, they may not really. It may really boost the cost. It may not be worth it.
Yeah.
And I think that's what the administration hasn't calculated in. I'm all for onshoring, and some of these businesses are just. I don't think are ever coming back
Yeah.
because it costs of production and what the consumer would have to pay. Uh, so I would say look at cities that are growing, and you can really look at that by population migration. That'll tell you where the demand is, and then follow the headlines. See what companies are growing, what companies are adding headcounts. That'll tell you if they're a good tenant or not. Just it's one thing I do during tell me about your business. I'm not looking at rent comps and sales comps like you might in a multifamily. I like to talk to the platform manager, facilities manager. Tell me about your business. What's the average tenure? How long is the average commute? And what do you guys do here? What do you like about the location? Uh, so I really think there are a lot of opportunities in this space for people.
Yeah, absolutely. All right. Next question is about lessons learned. It's not all roses in real estate. In fact, many times something goes wrong and we get to learn a lesson. So, what was a deal that went a little bit sideways for you guys, and then what was the lesson you pulled from it?
Well, I guess on the multifamily side, I had a lot of deals with unexpected, underground utilities going bad, rotting out, and insurance spiking that you never really counted on, insurance tripling in a single year, things like that. So I learned that on the multifamily. And then early on, we had some single tenant buildings like 15 years ago, and they filed for bankruptcy once, and then they were bought by a private equity shop, and we figured they were going to be good. And Then they filed for bankruptcy a second time, and we ended up giving the buildings back to the lender, and then working with the lender to try to maximize the sales proceeds because we knew the buildings really well, and try to get them as whole as they could, even though the loans were non-recourse. So that's why we're very sensitive to single tenant buildings. There's got to be a reason for investing in a single tenant building now for us. I'm not chasing cash flow just because it's a nice. And this was a big name back then, but I've learned to stay away from single tenant. It's all about diversity.
Yep, makes sense. All right, that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
You can find me anywhere on social media, whether it's LinkedIn, Instagram, Facebook. Just put Irwin Boris into the search bar. You'll find me. You hit LinkedIn, you'll find on my profile a link to my calendar. You want to talk? We can talk. Even as with our investors, I like to do the investor relations. It's not like you're talking to somebody in the middle that is so disconnected from the property, because I'm involved with the acquisition, the strategy, the asset management, and the closing. I can tell you about the deal and why we like the deal, where it's not somebody reading off a script that has to get back to you. And it's all about really cultivating long-term friendships with our investors. We treat them as partners, and we try to be involved. Like I have my kids are going to college. A lot of our investors' kids are going to college. We're comparing notes on colleges, university tours. We talk about wine. We talk about tequila and vacations, and so we like to get to know people on more than a personal level. It's not just like a give me your money, we'll send you a check type of thing. It's why what are you trying to achieve? Tell me some of the obstacles you've hit over the years. I'm trying to help people and give them the benefit of my knowledge, and once in a while I learn something from other people as well.
There you go. Yeah, real estate is first and foremost a relationship business. So I love to hear that. I will put those links in the show notes. So if you guys want to reach out to Irwin, all you got to do is just click the little more in the description. It'll pull down that full description, and in there you can find his links. All right, Irwin, that was great. Thank you very much for hopping on the show.
No, Gabriel, it's always a pleasure to get on and try to help people along with their journeys to financial freedom.
All right. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.